Hello. Hope everybody can hear me. If you guys can see my screen and can hear me, just put plus in the chat. Morning. Can you confirm you can hear me? Crisp and clear. Nice one. Alright, so today's schedule will be we will cover some setups, have a look what market is doing, and we will try to focus on the live stream for any questions and answers for like approximately 1 hour. If you guys has any questions, just drop them in the chat, in the YouTube in the chat, so we will cover them a bit later on. We'll have a look on some trades I done this morning and the reasons why I took it and how I'm reading it, and then go through some new tools what we've been developing and how we progressed from the pretty much last, I think, 2 months. Then the last live public YouTube one was. We were really busy, and just look what if there's any questions and so on. So today, me personally, I took short on GBP GPY from high of the day. If we go down in 1 minute. So basically I'm speaking about London's time. It's UTC 0, and just let me put the let me go 5 minutes, easier to read it. So basically market was basically market made high of the day and rejected under peak formation high, under previous day's high, so basically failed breakout to the upside. And specifically high of the day was put in place as soon new 8 hour opened. So basically that's second bar in the range for the 8 hour ranges, and we had peak formation at the high from 8 hour and peak formation high from 4 hour, and we had 8 hour open, instantly flipped over, so it means it's start to develop first 8 hour bearish range, and we locally had 4 hour, 8 hour and 50-minute peak formation, and we had nice pin bars with the rejections. So as soon as it came back in that 8 hour open, you can see this little green line, that's 15-minute peak formation high. So as soon as it's made a stop hunt to the 50-minute bar and rejected, closed under the daily peak formation high, I took short and was targeting instantly, because this is over here you have 8 hour, over here you have 1 hour, so I wanted to be partial risk free, basically take the partial from previous hour low. So basically like this hourly candle which was pushing up, you can see the hourly open, so it's basically 5 a.m. candle, so that's 5 a.m. low. So basically over here I had a partial to basically I took half off. The way how we manage our trades is basically we open double size over here, and then we close half of it, 50% on your wherever is your partial. Usually it's like 1 hour, so basically it was there, and then 25% there. Soon it's took, you can see we have a black line here, which means that's 1 hour peak formation. So it means as soon new hour opens, it stop hunted previous hour's low, and that's the strength for 1 hour candle. So 1 hour candle stop hunted previous candle and reclaimed 1 hour open price. That means 1 hour time rotation. So the guys in Discord who is familiar with stage 1, 2, 3, it's basically we have stage 1 peak formation. That's first sign of the strength. Then confirm open price reclaimed, that it's reclaimed at stage 2, and pretty much we are targeting then previous candle's high, which was 1 hour open here. So that will be the target. But you can see you have a bigger level, which is daily. Daily, of course, stronger than the hourly, and it's ignored, respected previous hour's high, and just rejected from daily's peak formation high. But it's not just daily's peak formation high. You have a daily / weekly's open price. So weekly / daily opened, put low in place, came up, swept, failed to go higher, and respecting now it's open. So daily / weekly range is slowly turning bearish till proven otherwise. So then when it came back on 1 minute on the rejection of the peak formation and daily weekly open, I took another short and was targeting this low there. So it came here and just tagged it. Actually I closed it manually because of the spread. Didn't even came close to it. It's because it came down. As soon as it started rejecting, I just closed manually because it's just building more and more liquidity. But nevertheless, I'm expecting that low of the day will be taken out. I'm expecting low of the day will be taken out, and this is previous range high. That's monthly color coding. So basically this is the new Automa tool which we've been developing, which will have only specific things what we are using in Automa, which will be peak formation high low as a storyline. So basically as soon one is taken out, as soon another one is taken out, it will stop drop. So basically levels, the levels on the chart will be only interactive levels, basically levels which we had some kind of interaction, and that will be either peak formations, open price for time rotation, and labels for high low, and details regarding that's trend reversal high low or that's trend continuation high low. Same as for peak formations, it will be detailed, confirming, giving an explanation. Does that peak formation is just does that's a reversal peak formation or that's trend continuation peak formation, as there is two different types you can objectively filter it, which gives you instantly different context for continuation of the market or reversal. So, and yeah, that's basically will be table regards the and regards the table regards the either peak formations or previous ranges breakout. Basically, as you can see, this previous range high, which is monthly time frame, the color coding will be here as well next to the time frames, which color means for which time frame. Purple is for monthly. So what does it mean, previous range high? It's, if we go like daily, we can see go lower hourly. So previous range high, that's basically previous month's high, but once we pushed above the monthly high and came back, closed underneath, that was what, that's at that moment that was peak formation high for monthly range. But because we reclaimed this comes support, we just trending higher. So now that's the one of the first resistances. I will say that's next resistance, because as we know, we target basically higher time frame instantly will be first resistance, but the first obstacle for any time frame be one time frame lower. What I mean by that, by obstacle, that's mean like if we just reset that, and if we have a look basically on today's session breaks, like today's price action, not price action but levels, if you come to the chart, if you come to just let me check the chat to make sure everything is fine. Just drop the guys plus in the chat, just all good and you can hear me. So basically when you come on the screen on the charts, so basically you instantly can see okay what levels you have on the important levels you have to know about it. So instantly, if you're looking at the daily range, like today's daily range, so you instantly okay what's all the levels will be read from what, from the open price, because open price will determine does today's range will expand down or up, and we know candle can go only up or down, so there is only two directions market can go. So if daily range will expand downwards, if our bias is that okay today I'm targeting short side, so from daily / weekly open, because Monday we are targeting what? We are targeting what is the next resistance for daily. First obstacle will be 8 hour, but we don't have any 8 hour levels down there except low of the 8 hour, which will be down here at the moment, because already at second 8 hour this low could be as a 8 hour target for this first range, that's low of the day, but next one will be previous range high. As soon that breaks, there's pretty much, if nothing is created on the consolidation, pretty much we are looking from previous range high of the weekly. So yeah, basically that was my thesis for the short. As well, we had so the ones who knows, we have alerts in the Discord as the signal bars of the conditions, and the ones who is using the multi-time frame signal screener. So I will just quickly show the example. Forex. Yeah, we have a Forex scanner in the group, which basically every day, every week, every 8 hours, every 4 hours drops the alerts what market, if the market done any significant 1 second, any significant work, any significant move. So that's the example. So basically it shows the automatic bot drops the alerts regards do you have any reset bars, outside bars, triple highs, triple lows, first green, first red. It's similar for the ones who is using the screener. It's basically the same, inside bars and so on, inside ranges. So now we developed the replay tool, which basically on the go shows you you can basically do the case studies, like showing which is inside days, like for daily time frame, if you want you can use for any time frame, and you can apply 3 time frames the same time. Like we're using 8 hour daily and weekly. So you're basically coming every day on the screen. It's like, what is your thesis of regards the what does this previous weekly range done any significant change? Does it was inside bar, or then first green, first red, and then what's each day and each session. For each session we use, as I mentioned, 8 hour range, because we like to be completely objective as maximum, everything mechanical. So basically we instantly know if you have a 8 hour range, 8 hour range will be session, because they have 24 hours. If you split in 3, Asia, London, New York, you will have 3 8 hour range candles. So, and if you know that candle can only go in 2 directions, and what is the context between the current range high low and previous range high low, you have instantly 2 reference points, and depend of the open price and previous range, you can instantly determine does it's gonna go higher or lower. So yeah, that's anyways regards the what the always we looking what the previous range done, and previous range we had a first red, it's closes the red day, and had a triple highs. And major thing for us is the peak formation, because it's just stop hunted and came back in range. So now instantly if it tells me okay, and plus previous range slash previous day, put in place high of the month. So as soon I know that previous day put high of the month, so sorry, previous, because today is Monday, so if previous week put in place one time high, important high of the range, which is high of the month, instantly this week I'm looking for high of the week setups. So I instantly have high of the week slash high of the day. So now I'm interested, okay, I want to see the weakness. We have instantly session peak formation high, which is 8 hour range. I have instantly level, and I know I have weakness there. That's mean what? 8 hour range fails to go higher, so it's gonna reverse. What's gonna target? To flip daily range. It flips daily range comes back, resistance from open, and it just again confirmed that daily candle is flipping bearish and you're targeting lower. So yeah, it's consolidating, kind of know. Anyways, and just clearly completely objective rule sets. Regards the ranges, what the previous range done, and specific levels for reversals or continuations and so on. So just let me feel free to drop any questions if you have any questions, guys. So that's regards this morning's short. Then pretty much that's regarding signal box indicator, which will basically will show you all your ranges and time frames or whatever, where you can apply 3 multi-time frames. Example on 1 hour, take this one off, and yeah, you will have instantly what is weekly, triple highs, what's daily, first red, triple highs, peak formation high, and what the 8 hour done, that was outside bar to the downside. So it gives you the context for each range, and it helps you to be objective, and it really helps to do case studies. Like basically if you say okay, what I don't know, you take daily time frame, so you want to see let's say I don't know, you want to test it 4 hour ranges, so you want to test 4 hour ranges and inside bars. So 4 hour 4 hour inside bars example on 15 minutes to just there you go. Oh, I didn't even put attention So basically where you had a high of the day. So that's UK time, London's time, 6 a.m. when new 4-hour candle opens, and that was inside range. That was inside the range. So, and that previous 4-hour low is this one, and that's where they originated. So this is 4-hour inside range. So yeah, you have instantly peak formation on inside bar high, and 4-hour open flips with the engulfment bar, with the outside engulfment bar for 15 minutes, and bang, came back, rejected from higher time frame open, and continuing lower. So as soon it opens, it will draw you the box with the high low 50% and open price from that signal bar, and it gives you the way how to test it. Like we have a range templates in the Discord where you can go through and have a specific rule set for each type. Either it's inside ranges, first green, first red ranges, reset outside bars, or triple high, triple lows, and it's have a objective templates regards the rule sets whenever open price, either it opens above 50% or below, and what the range type, does the range type put any significant high or low. Basically, if this is 4-hour, we will be interested in does it format after high of the range, low of the range being put in place, high time frame, basically after high of the day, low of the day be put in place, or after high of the week, low of the week be put in place. Like here, this 4-hour being put in place after high of the week. So high of the week was put in place, and then you had inside the range for 4-hour. So instantly you have a stronger bearishness. So basically you instantly monitoring what? If you want to be objective, you need to have two reference points. For anything you have two reference points to have context. So instantly what? You confirming previous range high and previous range low, and then which side it takes out and how price action acts regards the previous 50% and open price. Why open price? Because open price determines does this range will be bullish or bearish. Absolutely objective, everything. So yeah, you can go back and back test it and so on. As well, it works on the bar replay. So with the templates, you can go through and basically study and make case studies. That's regarding the signal box. Then during the holidays, we developed two another tools. One is multi-time frame average bar range, which is basically similar like ADR, which is average daily range, but for this case it's average bar range, because you can review any market, any time frame. So basically, if you are curious regarding which markets moves the most, this is example, this is daily time frame. There you can add on the screener, you can add like 30 assets, and it will show what is the for last 30 days what is average range for the daily range for last 30 days. It will show you the pip values basically. Then the blue color is gonna highlight the markets which has increased volatility for that specific day or range. Basically, if we choose daily time frame, that's mean today NZD CAD and NZD USD and silver and BTC has increased volatility. That means the range is starting to increase in the higher. So you can see there was 95, 97. So it's Friday for GBP GPY it was increased volatility. So it's just extra filter to gives you if there is increased volatility and how its market might act. And then the check mark, it means in that specific day market fulfill 100%ly, like in this case 193 pips. As you can see here, as soon new range opens, it will draw where is the today's for GBP GPY today's average range is 178 pips. So it's basically as soon it puts higher low, it will draw where is the 178 pip mark both sides. So it's mean depending on your bias, you go short, so you know from your high of the day setup you're looking down 178 pips. That will be average move for this pair for last 30 days. How to apply it? For us, we using that to filter which markets has volatility for specific day. Then we filter which markets moves the most, so we can filter which setups to take because it has bigger opportunity. But the levels where the average range basically ends, you want to see them together with liquidity. Why? Because the market moves from liquidity to liquidity. If it's put higher low in place, that's mean you want to see after stop hunt being done, and then to target again, you want to see is gonna target some kind of liquidity. So basically, when like in this case for GBP GPY on 1 hour chart, you say okay, we have all this last accumulation, that will be some kind of liquidity. We have a liquidity tool which draws literally all the range liquidity, but I will check later. But as well, we can see we have a fair value gap or imbalance, whoever used, that's like passive liquidity to eliminate another side of the orders. So that's pretty much comes together really nice with the 178 pips in case if we are bearish bias. So that could be really nice target, and you can do that for absolutely every single time frame, every single range. We call not candles but basically ranges because it instantly gives you specific levels. Then over here you will see it's basically average bar range, that's the pip value, what's the average for your lookback, like 30 days or 100 days or whatever. And then check mark, that's how many times from this 30 days it's hit 100% of the range. So if we have a look to, I don't know, whichever, like what is this, GBP GPY, so basically this one, then for last 30 days, as it shows, it's 178 average range. 6 times of 30 days, 6 times it's hit all the 178%. So basically it's 20% chance it's gonna fulfill 178 pips. But then in the settings you can easily change. You say okay, I don't want to see 100%, I want to see from this 178 maybe 50%, you know, how many times it hits the half of the average bar range. And then when it updates, it will basically gives you another percentage. So 53% times, like basically half of the, basically from last month's time, last 30 days, 16 times it's hit half of the average bar range basically. So basically if you're saying okay, there is 50% chance that we're gonna hit basically 180. So basically there's 50% chance we're gonna hit to that least like 70 pips. So then you could say, okay, where is the 70 pips? That's, you know, okay, this low. So that's, if you have a high of the day setup, you like I showed what I took from the high this entry because of the peak formation on 8 hour, high of the day in place, or time frame start to rotate, daily failed, and so on and so on. So you say, okay, that's the, you know, high probability setup that's gonna come and hit that that low. But then you have another markets which will have a, you know, like crazy percentage hits, and when you go to like weekly range, you know, it can give you, okay, what's the weekly average range for the pair to move. And you, like, if you say, okay, I want to see just 50%, look, it's the percentage is just 90, 90, 97. So it's like basically we in Automa, we focus specifically on the high of the range, low of the range setups, like multi-time frame, high of the range, low of the range, specifically of range rotations. Basically what this means, it means as soon, like example here, as soon we have a peak formation low, we know this is the low of the whatever week. In this case this is Tuesday, so that's low of the week. What we want to see, that's Wednesday, so instantly we want to see the Monday, that's Monday's open. So we instantly want to see the peak formation low on the daily, and that's low of the week. So that's daily's open. So that's stage 1, that's stage 2. We're going after what? We're going after previous day's high. So market, if the low of the week in place, market can go opposite direction if we don't flip over 1 hour, 4 hour, 8 hour, daily, and so on and so on. So if that's peak formation on daily, that's first sign that daily range is failing. That's strength for daily range. So what's the confirm? That's the open price, because open price will confirm that daily candle start to flip bullish. So that's stage 1, that's stage 2. If we know candle can only go 2 directions and start to go up because it's confirmed the open price, what is the first target? Previous range high. Simple. So you have 1, 2, 3. That's it. That's weekly. Okay, we have low of the week, weekly open flips. If that's possible, if the previous week was bearish, and now we have first sign of the weekly open to be reclaimed, and that's the strength on the weekly range, we just simply ask, okay, where is the previous week's high? So that's the previous week's high. Then stage 1, stage 2, stage 3 for weekly range. Again, absolutely objective. Can you also tell where you put the stop loss? Ansan Fang just regards the stop loss for what? For the position I took today. So basically, yeah, that's the average ball range tool what we have. Really helpful for backtesting and filtering which pairs and so on. And then another one we developed, which is basically, it's part of the statistic tools, similar as average bar range. That's just statistics, because you want to have statistics in your side. Regards the high, this is high of the range, low of the range stats. So it's basically, for this specifically, is give you the stats when, again, it's based on high of the range, low of the range concepts. It's everything about when high or low being in place and how it's in multi-time frame respects between 2 time frames. This one is basically gives you example here in which days most frequently we have a high of the week, low of the week in place. So for this pair, GBP GPY, for last 52 weeks, basically for last year, approximate last year, that's like a range is a bit up plus minus, but it's approximate for last year. High of the week, low of the week most frequently was Friday and Monday, and it was a really big surprise that most of the pairs, most frequent high and low is Mondays and Fridays, when many retail traders been told don't trade Fridays or Mondays. And when you kind of combine the concept of peak formations, and that you know that high and low of the week most frequently is on Mondays and Fridays, there instantly we developed two entry models specifically just for Mondays and Fridays, which we will develop some, another statistic tool to gather the more data. But basically, if you know that, for example, if you know that high of the week was, example, I'll show you example maybe. Monday, Friday, Monday. It's hard to say. Anyways, so basically, if you know that Friday you have a high of the week, and then Monday comes and takes out the Friday and start to go bearish, you know from statistics that if we go change this in percentage, from statistics you have 21% chance that Monday's high is high of the week. If previous Friday was high of the week for previous week, because what? If you have daily taking out Friday with the peak formation, that's what weakness for daily, but that's already high of the week for current week, which took out the previous week. So instantly you know you have 21% chance that it's gonna come down all the way to the low of the week of the previous week. So that's just some statistics. For crypto it's just crazy. It goes up to like 60%, which is absolutely nuts. Imagine like high stats is already like 35-40%. Like 30% is like high, because you see like another days it's like just like 10-15. Like 30% is like 32% low of the week for last year being on Mondays, which is the same thing. If you have low of the week on the Monday and previous week's low is on Friday, and you have peak formation on daily on the Monday, you have already two setups. You have already two entry models just for Mondays and just for Fridays. So, and it's for backtesting again. It's so cool for backtesting. You can go back and test it and stuff like that. Yeah, let me see. Answer phone. Okay, I'll show you where was my stop loss. So let's open 1 minute example, because my entry was on 1 minute. So if we so 1 second, let it slow. So 1 second, 6. My entry was here. So that's high of the day been put in place. That's 8-hour candle open, like 6 a.m. London's time. So it came down, it came back, and this, like I said, this green line, that's peak formation high for 15 minutes. So basically it's already weakness on a 15-minute chart, but where it's appears at what level? At 8-hour open price. This is 8-hour open price. So what does it mean? It means you have resistance at 8-hour open price. That means that 8-hour range is expanding towards downside with local stop hunt at 15-minute peak formation. For us, entries is always targeted for 1 bar entry, depend on time frame of your chart, but basically it's always engulfments and pin bars, because you want to see the another side is coming in with the volume, and you have instantly out. So basically for us is that we have three criteria. First is high the range, low the range. Then next one is time rotation, and third one is liquidity. So if we have a look to high the range, low the range, yep, we have a high of the day, high of the week in place. So the next one, time rotation. So this high moves away. What does this rotate? It flips over. First it flips 15-minute, and oh jeez, why my backward is not working. So first it's flips first 15-minute candle, then it flips 8-hour and fails under the daily open. When it comes back, this rejection confirms that 8-hourly candle is flipping bearish with the local stop hunt liquidity, then local time rotation, which is 15-minute flips bearish, confirming that 8-hour flips bearish, and we have a this is 6 o'clock, and that was yeah. And basically when this new hour opens, that's previous hour, that's new hour, so this hour respects the previous hour. So that's, you know, another thing, most time frame order flow. Basically it's as soon this candle close, my entry will be after close, and then like partial risk free. Basically the first partial will be this low, because this is where it's started to push up and failed. But the stop loss, I have soft stop loss. Basically my stop loss is in, if I need to, so basically as soon this is entry, my stop loss will be like, okay, that's my invalidation, but my take profit first partial will be at this low. As soon this low is hit, I put my stop loss like 2 pips and let it run. But my basically as soon I open the position, I don't put physical stop loss. I put mental stop loss. Basically, where is my invalidation, which is like, yep, that's high of the day will be invalidation, because you know you can still play, which is usually is not the case, because if you have a failed push to upside, like for this 15-minute peak formation high, you have failed push to upside, you have high resistance for 8 hour, so it's just, you know, rejects, and then just keep pushing it. Same as here, when it came back, it's rejected from the daily peak formation high level on the weekly daily open price. So it just instantly, you want to see, like I said, pin bars or engulfments. So you have a bearish pin bar, bang, bearish engulfment. You have a at the level, which is peak formation high, which is liquidity level, at the time rotation level, which is open price, with the price action locally, which is engulfment spin bars. As soon as it's closed, entry, you can literally put 2, 3 pips, 5 pips, depend of your, but it does all depend of your time frame you're taking entries. But because it instantly gives you either it's invalidates or you're not. But on this move down, you already partial risk free, because like I said, we open example, if your size is I don't know, if you're trading with one lot, they will open like basically 2 lots here, and then on 50%. So basically, if, let me draw what I mean. So yeah, so basically it's basically 1 hour. So basically, if whatever is this, like let's say 5 pips from your entry is your stop loss, and anyways, approximately, Anyways, so if that's entry and you say, okay, my stop loss 5 pips, that's mean at 1 hour plus commission and spreads, probably 1.2 hour it's usually, we close 50%. That's mean I don't need to move my stop loss to break even. It's mean if I close half of the position, I open double size. If I close half position, that's mean I'm break even if my original stop loss is hit. Why we prefer that one instead, like taking partials and move the stop loss to the entry? Because the way how the market moves, it's, you know, you want to always be taking entries, you know, when you have some kind of liquidity be taken out, like either it's peak formation or market structure sweeps or whatever. But remember, not always, but many times market will come back to retest that level, because especially if they go aggressive away, they need to come back, mitigate these orders what's left over. So, and with the spread they can tag you on your entry. So if you know, if that high, that low, you know, that high, that low is the one which market starts to originated to move away, that will be the safe one, you know, that will be the safe one. They come back, you see, they come back, like if your entry here, they come back here, but your entry is above the high, that's safe one. So we rather to take half position off and leave stop loss where it is, instead move to entry and being stopped out and then try to get in again, and you know, it's another emotional process and stuff. So from now we will have a live Q&As every Monday, where basically we'll try to go through some either just, you know, review the market, maybe do some case studies, or just type read the chart, answer any questions, and, you know, showcase some stuff, and yeah, originally, like I said, the Ultima is the latest, will be released this week. It will be developed further as the bot, as the trading bot, as the algorithm for the Automa's members, for the league tier. And yeah, if anybody has some questions, just drop in the chat. I will wrap it up in a few minutes, so if any questions, just drop in the YouTube chat so I can check it out. So yeah, GBP GPY, what does it done? What's the 1 minute? It took out all this triple top, triple bottom. It was building, retails triple bottom. Now it took it out. Made the new low, the 8 hour. Nice. And the new tool is not in the squad. Now it will be in the squad. You have a guys. This is basically more optimized and more updated version of the multi-time frame range key levels. It's basically same, but this is more like for so basically all the features and settings and levels and so on, that's more for like visualization while you're learning, to understand, you know, which level means what in the context between the two ranges, you know, in context between the multi-time frame order flow. Does this, you know, range respects previous range? Then you know, what's been established on the previous range, previous 15 minutes, you know, previous week we established half the year previous 4 hour we established half the week and so on, and what it's like more like trading assistant kind of, is like all the stuff. But like I said, the Ultima will be developed towards as the algorithm for so basically for entry bars. What does it mean from entry bars? It's mean, like I said, where was my oh Jesus anyways, let me switch that one on. So basically where I said we use one bar entries for entries. So basically like I said here, like this engulfment, the bar markings is on another indicators. Anyways, so just oh Jesus Christ, let me. So as all the most of the settings is literally for for you to guys understand, like, okay, why previous levels are important, what the peak formations looks like, what the time rotations looks like. For us specifically, once you learn it, you don't need to see that visual, that line or whatever. You can see that already, like, just from literally just from three things, which is, high level, high the range, low the range labels, open prices for time rotation. You already know, okay, if we have high and time rotation fails, we know that's the target, till proven otherwise. That's mean till proven otherwise, if one time frame lower makes obstacle basically for this 8 hour range to come down and take out this one is obstacle what 4 hour low. So it's 4 hour rotation to opposite version, because one time frame lower from 8 hour is 4 hour. If 4 hours starts to gives bullish signs, that's first obstacle for 8 hour to continue, right? So you actually read that from specific levels. So basically, yeah, and like I said, this Ultima will be as well. We just recently in the team discussed it will be released as the two version indicator, because originally we want so now it can be used as in the bar replay mode. So in the bar replay mode you can use it for backtesting, so you can play out and see the levels and and do the case studies and backtest. But there is certain features we want to add for the algorithm to be able to execute, and it just again trading you limitations. It's overwhelms the script, the code, and it's just again crashes and it's not gonna give you opportunity to bar replay. In real charts, any indicator will work, but as we develop further and further and put more stuff in there, more specific things, it just fails to be able to use in bar replay because the memory is limited. Anyway, so from now, most of the advanced stuff will be pretty much like in two versions. One will be for real time chart reading, from basically for trading, for analysis. So you will have all the details, which, like, one specific thing that we tried to code during the weekend was to show you peak formations, which ones are trend continuation, because we know whichever peak formation happens, it's reversal as the first sign of reversal. But there is category of the peak formations which is under the trend continuation, so they are more I want to know which ones are that. So as soon as it happens, I know it's okay, that's continuation one, so I know trend most likely will continue, so I can be more aggressive for the specific setups. So, and instantly as soon as we done that, it just crashed and failed on the bar replay. So we say, okay, we will literally need to release like two versions of each advanced indicator, which basically one will be for case studies and bar replay, and another one will be literally for with the more specific details will be for real-time trading. But yeah, it's not going to be squad, it will be in the league, because in the squad, guys, you already have we have the key ranges, and it is completely the same thing. And the more advanced so basically the algorithmic version, which we say which will be developed like more like bot with entry bars, basically similar like signals, but on basically like this bar there, that will be kind of entry bar criteria for the bots to take short, because of all the conditions we discussed, of the high of the range, low of the range, of time rotation and liquidity sweep, and price action basically of the engulfments and pin bars and so on. So yeah, these two, the Ultima and the signal boxes, the multi-frame signal boxes, they will be both, because this one as well is on bar replay. The thing is, like, most of the people who is in league, they, there is that most of them use like premium trading view accounts, and for bar replay you need trading view premium one. So there is not much. Probably there is, of course, there is value for not having bar replay, but we just want to give some support and love to league members, just for that, they've been with us for all this time and supported us with value, so we give some extra to them. Alright, you can see there's no more questions, so I will wrap it up. And Discord guys, the members, will see you Wednesday on the workshop. Our next workshop topic is daily routine and daily process for filtering trades, filtering pairs, and so on. And yeah, YouTube, see you next Monday. Thank you very much.